不光是查封了我的房子，还冻结了我的银行卡，连我微信的几块钱也给我冻结了，并且还多了几十万的一个费用，违约金的罚息、案件的受理费、律师诉讼费、财产保全费等等。我不光房子没了，我的首付也没了，我还欠银行30多万。
全国现在有8亿人负债，有4、5亿人就面临还不上了。光是信用卡逾期的金额就超过了几千亿。现在全民负债的总量大概有几百万亿。我们现在10多亿中国人中有6亿人是没有任何存款的，这不是危言耸听，这是一组真实的数据。
Chinese citizens and businesses are burdened with a heavy load of debt. According to data from China's central bank, the National People's Congress, and financial media outlets. Shocking statistics reveal that total personal savings in China amounts to 22.7 trillion yuan, while the combined debt of both businesses and individuals has ballooned to 33.1 trillion yuan. It's alarming to know that around 500 to 600 million Chinese citizens do not have any savings at all, and the number of debtors has reached a staggering 700 to 800 million. Moreover, around 420 million people are at risk of defaulting on their loans, with credit card defaults alone exceeding 200 billion yuan. What has driven such a large portion of the Chinese population into debt, and to whom is this money owed? In reality, tracing the origins of these massive debts reveals that the vast majority stem from policies implemented by the Chinese government. Let us examine the 6 primary sources of debt afflicting the Chinese people. First, housing indisputably ranks as the foremost cause. Many individuals have become burdened with debt due to housing expenses, from making down payments to ongoing financial commitments. Second, online financial products have generated debt for a variety of subjective or objective reasons. Third, traditional financial products have contributed to debt accumulation. Fourth, government-endorsed projects have prompted debt accrual. Fifth, the government has intentionally imposed debt on businesses and individuals. Sixth, people have been duped into incurring debt. First, let us delve into the housing conundrum. In China, purchasing a home represents the most substantial and widespread source of debt for the citizens, as the very act of buying a property entails accruing debt. But what constitutes the most significant portion in the price of a house? The answer lies in the land transfer fees collected by the government. In essence, the largest share of home buyers' payments goes to various tiers of the Chinese government, followed by real estate-related government taxes, and finally to developers and other pertinent stakeholders. So what is the proportion of land transfer fees and real estate taxes in China's housing prices? According to available data from 23 provinces and municipalities, 17 of them exhibit a ratio of land transfer fees and real estate taxes to housing prices as high as 74%. Moreover, this income constitutes 86% of fiscal fund revenue, a figure local governments simply cannot afford to forego. Government-collected land transfer fees have propelled housing prices to staggering heights. The average housing price-to-income ratio in 100 Chinese cities stands at 12, considerably higher than Japan's 6.83, South Korea's 8.9, and the United States' 5.07. What would transpire if land transfer fees were eliminated? Based on calculations by users on the Chinese forum Zhihu website, if only construction costs and reasonable developer profits were taken into account, housing prices in China would plummet by more than 50%. This would align the housing price-to-income ratio with levels observed in free market economies, enabling a significant segment of the population to sidestep debt. However, owing to the government's continued collection of hefty land transfer fees, housing prices remain elevated, forcing many Chinese citizens to resort to bank loans when buying a home and subsequently shouldering immense debts. Chinese home buyers' efforts far surpass those of their counterparts in other countries worldwide. Yet with the Chinese government imposing land transfer fees that account for 74% of housing prices, it seems that public welfare is not their primary concern. The second major source of debt for Chinese citizens, particularly in the past decade, is online financial products. Significantly, the Chinese government's robust promotion of various financial management products such as P2P lending, private equity funds, public-private partnership, and numerous loan products relying on a plethora of digital platforms led many Chinese individuals to fall victim to financial management and online scams. A specific example is the Chinese government's promotion of P2P lending. Initiated in 2013, this form of direct lending between individuals online was not regulated well, causing some platforms to attract term deposits from the public with annual interest income up to 30 to 40% in the early stages. As some borrowers defaulted on their loans, the capital chain of certain P2P platforms began to falter, culminating in operators absconding with funds and businesses shutting down, leaving depositors with nothing. In 2022, the Chinese government introduced regulatory policies, prompting some P2P platforms to adjust their business models and seek banks for fund custody. However, it was too late. In the large-scale P2P collapse wave that erupted in June 2018, 221 online lending platforms went bankrupt within a month, with operators vanishing or losing contract, leaving an estimated 1 million victims in their wake. Other loan platforms include Ant Group's Jiebei and Huabei, and financial products like JD.com's Gold Bars. These initiatives have indebted tens or hundreds of millions of Chinese citizens. Data from Chinese finance media's Haijinwo revealed that among China's 1.4 billion population, the number of debtors has reached 700 million, with a delinquency rate of 46%. Nearly 80% of the working-age population is in debt. This situation is closely tied to the Chinese government's vigorous promotion and propaganda of these projects and products. Ordinary people began investing in these products after hearing the government's promotions. When these projects and products later encountered problems, the government's response was to solely blame those financial enterprises or individuals, such as cracking down on P2P and introducing various regulatory measures. However, the government avoided mentioning their own policies and strong promotion at the time. Those who dare to hold the government accountable risk apprehension. Due to the government's irresponsible attitude, the online finance sector has become the most widespread primary debt for the Chinese public, besides the real estate sector. The third significant source of debt for Chinese citizens is traditional financial products, such as stock trading markets, bond markets, futures markets, various lottery markets issued by China, and even using bank deposits as loan guarantee. Is it that no one in the government is responsible for these areas, or are they feigning ignorance? The government constantly encourages ordinary Chinese people and various retail investors to participate in many high-risk financial products while entirely neglecting the risks. Even on the Chinese stock market, which resembled its Western counterpart, almost no listed companies are without fraud. With so many listed companies committing fraud, the Chinese government's policy is to turn a blind eye and ignore the issue. In numerous instances, it seems that the risk management protocols employed by local banks in China amount to little more than superficial formalities. Yet, when troubles emerge, the labyrinthine nature of the rules and regulations governing financial institutions can make it exceedingly challenging for the public to decipher the real intentions behind their actions and operations. Take, for example, the collapse of a bank, followed by an announcement that an individual has absconded overseas with the funds. While such an explanation may appear to resolve all concerns, those with expert insight into the industry recognize that such an event could not have transpired without the participation of officials from the central bank or the Chinese Communist Party. Regrettably, the majority of the population remains uninformed about these intricacies, and as a consequence, their investments may be entirely depleted. This leaves them with no means of recovery, and a growing number of individuals find themselves burdened with debt. Amid the recent episode involving a bank in Henan, the institution prompted citizens to submit their personal details, ostensibly as a gesture to convey that the issue was being addressed. In truth, however, this registration process bore no tangible impact on the recovery of the lost funds. The fourth major source of debt for Chinese citizens is the failed projects that the government also vigorously promoted. Examples include the nationwide entrepreneurship initiative, Xun'an New Area, Blockchain Technology, Hainan Free Trade Port, and even the Belt and Road Initiative. These projects were enthusiastically supported by both central and local governments, attracting numerous investors to invest in or cooperate with them. The Chinese government failed to effectively plan, execute, or manage these projects. After several years, these projects took a 180-degree turn, with the government shifting from full support to full opposition. Xi Jinping's grand plan for the Xun'an New Area, launched on April 1, 2017, was intended to decentralize Beijing's capital functions and promote regional development. Overnight, housing prices in the sparsely populated and impoverished region of Xun'an skyrocketed, with various state-affiliated organizations, schools, hotels, and restaurants flooding in. According to Chinese media reports, by the first half of 2021, Xun'an New Area have completed an investment of over 2.6 trillion yuan, with 125 key projects underway, and over 1,000 Beijing companies registered in the new area. However, on September 1, 2021, the Hebei Xun'an New Area regulations were implemented, which public opinion believes marked the downgrading of Xun'an to a prefecture-level new area. This was because the central government saw that the grand plan of 1,000 years was difficult to achieve, so they handed it over to the local government. The end result was that the participants and investors in the Xun'an New Area lost everything. The mass entrepreneurship and innovation campaign, launched in September 2014, provided financial leverage to entrepreneurs through government-led venture capital funds. However, they could not help entrepreneurs create market demand, leading to an 80% failure rate for entrepreneurs, with over 95% of student entrepreneurs failing. Guarantors also lost everything, and those who gave up stable jobs to start businesses ended up with huge debts. Now the government no longer talks about these issues, nor do they mention their responsibility for promoting these projects. They push all the responsibility onto ordinary people, and in many places even employ harsh officials to strictly deal with the participants of these projects. They absolutely do not mention that these projects were once vigorously promoted by them. The fifth source of debt for Chinese citizens is the government forcing people into debt, whether they want it or not. This includes government-backed projects like Guangzhou Evergrande, which led to investors taking on debt, and government auction projects like Hebei Dawu Group, which also burdened investors with debt. For instance, on September 9, 2021, Evergrande Wealth unexpectedly proclaimed a halt to the redemption of all previously sold financial products. Speculation abounded that the outstanding sum of unredeemed financial products reached a staggering 40 billion yuan. Consequently, investors and partners affiliated with the Evergrande Group found themselves unable to request payments. As a result, the debt arising from this predicament fell squarely on the shoulders of these investors. Moreover, the financial entanglements extended beyond investors, ensnaring numerous internal employees and property owners within the Evergrande Group. Another situation is when companies are forced into bankruptcy by the Chinese Communist Party and then sold off at low prices. The assets of Hebei Agricultural and Animal Husbandry conglomerate, Dawu Group, are an example of this. The founder of Dawu Group, Sun Dawu, a well-known grassroots entrepreneur in China, was sentenced to 18 years in prison on July 28, 2021. On April 14th the following year, the Gaobeidian City Court in Hebei publicly auctioned off all assets of Dawu Group. The auction reserve price was set at 680 million yuan, only accounting for 13% of the total book value of the group's assets. There were suspicions that the authorities were selling Dawu Group's assets at a low price for political purpose, blatantly denying investors their money. Investors also had no place to seek justice. This kind of situation is not uncommon in China, as many companies are sold off cheaply for various reasons. The irresponsible actions of governments at all levels have severely damaged the interest of businesses and individuals, as well as seriously affected the image and credibility of the country. The last type of debt for Chinese citizens is caused by rampant scams in society. In recent years, the problem of criminal fraud in China has become increasingly serious, including fraud via telephone, finance, credit cards, and the internet, which has become a significant issue affecting social stability and people's well-being. Fraudsters typically impersonate banks, public security, courts, telecommunications, and other institutions, using overdue payments issued with express parcels, invalid visas, etc., as entry points to gain the trust of victims and carry out scams. Credit card fraud usually involves using someone else's identity to apply for a credit card, illegal cash out, and false discounts. Internet fraud mainly includes various forms such as telecommunications network fraud, online shopping fraud, and WeChat fraud. It is important to recognize that the scale of the scams in China could not have been achieved without the existence of systemic and institutional loopholes, inadequate implementation, and collusion between officials within the Chinese Communist Party and scammers. In today's technologically advanced era, scammers have been able to obtain a large number of phone cards, create numerous online channels, issue multiple bank cards, and transfer a significant amount of funds due to these factors. Thus, the emergence of these problems is caused by the negligence, mismanagement, or collusion of government officials inside and outside the government. Due to government policies and the skilled means of inciting people to turn against each other, up to now, debtors and creditors in China have been fighting each other without seriously considering how the increasing debt of Chinese people has been generated. However, when compared to the West, it becomes clear that among the 6 sources of debt for Chinese people, whether it is real estate, online financial products, government-promoted projects, or government-imposed debts, these 4 types are not common in the West. The proportion of debts caused by traditional financial markets and fraud is also much lower in countries other than China. Some individuals may perceive that the widespread debt among hardworking Chinese people is the result of the problematic leadership of the Chinese Communist Party. If land transfer fees continue to be collected at high levels and various levels of government continue to avoid responsibility, dragging all Chinese people into a debt trap will only be a matter of time.